What's going on, traders, and welcome to the Weekly Watchlist. The Weekly Watchlist is a video series where I do a technical analysis on 7 tickers with some of the most liquid options chains. This series comes out every Sunday to give you a leg up for the week ahead. So as always on the list we have SPY, the Qs, Apple, Netflix, Tesla, Alibaba, Facebook, and recently added is TLRY, Tilray, the Canadian pot company that absolutely went nuts this week. So someone asked via email if we could go over that one, so that is on the list. If you'd like to see anything else added to the list, feel free to email me or comment down below and we can certainly go over it in next week's video. As always, if you'd prefer to skip around and not necessarily follow me through the list in order from SPY all the way down to TLRY, Tilray, then feel free to go into the description and find the timestamp associated with this ticker that you're interested in. Alright, so starting with SPY as always, but we're going to be starting by looking at the 20-year weekly chart. So up on the screen now is 20 years of SPY's price history. You can see that we kind of went sideways for a little while. 2008, the famous crash there, went down in history. But ever since then, the market has done nothing but rally. Look at it. It's just been charging in the upwards direction. It has these small little pullbacks. Sideways a little bit in this couple years, but ever since just charging upwards. And what I'm trying to point out and make visible to you guys is that what happened in February is really minor, and I wouldn't consider that a market correction or a market crash or anything like that. If you look at the grand scheme of things, we're still charging in the upwards direction. And why do I bring this up? I do think that the market is getting a little bit exhausted. I'm going to put up a screenshot of it's a picture of the S&P versus the money that's been flowing in and out of the stock market, and you can just see the huge divergence there. This photo comes from shadowtrader.net. They're a great resource if you're interested in learning more about market profile, market internals, things like that. So before we hop into the 4-hour chart, I do want to bring up the daily and just show you a bit of a misleading thing that's going on Thinkorswim. There is the tail on this candle that shows the gap to be filled. When we had this massive gap up and ran to new all-time highs that day, but that gap was never filled. So if we go ahead and look at the 4-hour chart, we can see that. So quite clearly you can see that the gap was never actually filled, and it's coming back down to do that just now. You can see that that gap comes into play at our previous all-time high here. That's 291.71, and we've pretty much come back down to tap those highs, the highs of those days, and it might come back down a little bit more, but I'm not sure how much more in order to fill the gap. So consider that one almost filled, and I would play that with caution if you are looking for that play, but something to keep an eye on. All of our supports and resistances, again, are pretty much mapped out for us because of where we're at. Price action-wise, we've pulled back perfectly into this previous high and even found a little bit of support. You can see that the tail of that candle went down a little bit further, found a bit of support, and closed a little bit higher. Back up around 292, just about 291.99 to be exact. So anyways, finding a little bit of support there and closing just below the whole dollar there. What could happen this week is a bit more of a pullback. Again, I was talking about the weakness in the market and the money flowing out of it with that screenshot. So it could always pull back again and continue in the downwards direction. Again, we're a little overextended on the upward side according to the Bollinger Band. Not a make all break all, but just something to keep in mind. The price action does look a little bit bearish. We have these 2 pretty red candles on decent red volume. It's not like we had baby volume like some of these in the past here. So do expect SPY to maybe pull back a little bit more. I'm not sure if the crash is going to happen, like we were talking about earlier. That's not what I'm trying to imply. But a pullback to maybe the middle Bollinger Band, which is a 20 simple moving average maybe, would be appropriate. Maybe the 50. Again, we have all of our levels of support and resistance mapped out for us. So the Qs, you can see that we did put in a new higher high than what we had last week. But what's interesting is we can adjust this trend line and sort of form a better support fit here. So we did pull back into this once, and if we pull back into it again and find support, that would be a higher low as well. So that would set us up to continue in the upwards direction, showing that the bulls are still in control and could continue to push the price higher. Again, our resistances are going to come into play based on some of these highs. This one looks like it needs to be bumped up a little bit. We'll bump that up there, finding resistance at 185.54-ish on that one. But again, right above it, we have some resistance based on what was happening in the chart history there. And again, the all-time high acting as strong resistance. For support, we would like to see this golden line here, which is our February, no, this is a high from back here. That was an all-time high. I don't think, yep. So that would be the perfect high that we want to respect. That was our all-time high from a ways back. Anyways, if we pull back into that one and respect that, that would be beautiful. However, the white trend line again could very well play support, which would form a set of higher lows, meaning we could continue higher. But if we do break through this, look for support to come into play first where these lows happened, which is 181.28 just about. And if that gives, looking for this to offer a little bit of support here, 180.55. After that, we're looking way back into the chart history, not way back, but a little ways back anyways. We'll draw in some levels just to play it safe. This level in here, certainly, 178.33 just about. And then if that set of lows gives, then somewhere in here, I would call 180 or 175, the whole dollar just about. But again, that's a little ways away. We would like to see some of this support act as support and push the price a little higher in the week coming ahead. Alrighty, so next up we have Apple. Apple has been consolidating ever since it ran to its all-time highs up here, respecting the levels that we've mapped out quite nicely. Again, the blue sky territory thing. We couldn't break out here, so we've been on a bit of a further pullback, and now it looks like we're consolidating into flat lows and lower highs, which could potentially set us up for a break of this level here. If 217 breaks, do expect the price to continue downwards to our next support level at 213.62, and if that one gives, certainly 210.38. After that, there is this level here. We can draw that one in. This is a pretty solid support, it appears. We have support coming in here. That would be 206.83, and after that, down here at 297.20. Again, a little ways away, but we are setting up with a descending triangle. It looks like we can draw that pattern in now. Our lower support is drawn in via this red line here. However, our descending triangle pattern could look something like that. We're tightening into this range. If we break out to the downside again, do look for that move through some of these supports. Not saying all of them, but definitely going back to test some of them if we break this descending triangle. This sort of ascending support is no longer relevant. We can remove that, clean up the chart a little bit. But again, if we break to the upside of this, it's very possible we could. We have the 50 SMA to get through. That's right above head. And then some of these resistances, which have been well respected, that we need to, again, test and break through. If we can do that, again, we can look to go back to 222.31. After that one, 224.95, and so on to the all-time high here. So that's Apple. Pretty simple. There is some big red volume coming in. It does look a little bit bearish right now. The consolidation is leading into this bearish pattern. Whether or not it holds up and we break, that is up to the week ahead to let us know. Moving on to Netflix here, you can see that the pattern we talked about in last week's weekly watchlist did sort of hold up. Last week we drew in this white bounce pattern there, and it sort of held up. We just pulled back a little bit further than expected. So what we can do here is similar to what was it, the Qs, move our support trend line to something like that. We have a new set of lows that have been put in, and we can get rid of this. So as we said, we came up, found our new support, which coincided with the 50 SMA and the price level 349.82, 350 just about. Again, just going to show that this could have been considered a super support. We have our new trend line being developed. As long as we put in a higher set of lows than this, then we are looking good. We can pull back into this level here, 355.86 just about. That would coincide again with the 50 SMA and just about the ascending support trend line acting as super support there. And we very well could have a bounce off of that, continuing the upwards direction. And I would say we're shaping up to break out of this 375 whole dollar quite nicely if we can respect this trend line throughout the upcoming week or two. Some things to keep in mind is the 250 sit right up below. A bounce wouldn't be surprising. However, there is some resistance that we need to sort of chop through here. Initially, we have this line here, which came from some pre-market data. Again, where this sort of stalled out a little bit. But then right above that is 375, and there's quite a ways to run in here. It did look like we ran out of steam a few times here and here, but again, that's pretty close to those levels, so there's some room to run on the upside if we find support here and continue in the upwards direction. Again, if we break this white support trend line, then look for us to come back and test this set of lows here. That is 349.82. If we go through that set, then again looking to come back down and retest this set in here, which is kind of a little bit choppy, but let's just go off of this level here, which is 344.50 just about. Look for that level to come into play. So Tesla now, interesting, we ran into our resistance based on the falling wedge and had a pretty nasty sell-off day here, but we did find some support and closed up, how many dollars is that? Between $9 and $10 higher than our low of the day, which was pretty cool to see that this support certainly held true. And from there, we've continued to retest our resistance that we're below. This comes into play as a support from history. We have this level, as you can see there. So if we can break back above that, then again, we have our initial resistance coming into play here at 307.60. If we can bust through that, then there is certainly some room to run on the chart all the way back up to 324-ish. Again, this would be if we can get through this white line. If it does continue to hold us down, then look for our first support to come into play at 288.50. After that, this set of lows in here. So some levels to keep in mind if we head in the downwards direction. Again, it seems like there's a decent amount of support in this general area. If we get down into it, I would like to see a general bounce out of it there. And from there, continue to break through this white line. So we'll see what happens this week on Tesla. So now we have Alibaba here. Baba looking pretty choppy recently. You can see we've had some odd gaps in the chart. I have pre-market data turned off if you've been wondering why it looks a little bit different than normal, but some odd gaps in the chart that have been happening. We have come down and found some interesting levels of support, so let's go ahead and adjust some of these lines down here. Based on this set of lows here, we have support coming into play there. This does act as a resistance. We can see it bumped into it here, and then these levels again are just kind of odd without that pre-market data on, so we can just ditch some of those. We'll remove that one. This I will definitely act as resistance. You can see, boom, came down, sold off. But anyways, where the price is sitting at now currently here leaves us in an interesting spot. We're still below our major support that we saw come into play there. This level is something that we want to see possibly hold up. That's the 170 level, so let's go ahead and just keep extending that. That's sitting right around 170. You can see we came up, tapped it, and shied away quite nicely. Just want to make sure it's still in the right spot. Yep. So still in the right spot. We do have our level just below it that has acted as support. We are below it right now, so if we get above it, then things would be looking good and we could possibly retest it. We are forming some higher lows, it looks like. We have a new set of lows coming in here, so depending on what happens on Monday, if we can put in a new higher high as well. We had a high here, set of lows higher than that, so let's just go ahead and draw some of this stuff in, make it a little more visual. We have lows coming in like that, being supported by this line. And we also have highs that are higher, so we have a high here and a high here, and we could potentially see this bounce, and if we put in a higher high, then things would be looking good. We would also be putting in a higher low if we bounce and see a low greater than that. So that's what we want to see happen on Baba if we continue in the upwards direction, staying in this ascending channel. If we do break out to one side or the other, if we break out to the upside, again, we have quite a few levels of resistance and chop in the chart immediately here. But if we do break to the downside, things could get pretty ugly pretty fast. There is a pretty lengthy area here in the chart that the price could run to the downside, just over $10 or just under $10 there, that the price could move in the downwards direction if this price channel is broken. Checking out Facebook now, you can see last week we drew in this sort of symmetrical triangle here where the price started to consolidate. Broke to the downside and ran to a support which I had drawn in, and look at how perfectly it came down to it. We drew that support in based off of some of these lows down here, sort of splitting the difference between where everything was coming into play, and again it just boom right to the T on it. So technical analysis, pretty cool stuff. Anyways, off that support we had a nice little run, And now what I would like to see is, like all the other stocks that we've been talking about this week, is a new set of higher lows. If we can come back into this support level here where we consolidated, confirm that as support and continue in the upwards direction, things would be looking good. What we do have to worry about is possibly forming a double top here at our previous low from the sell-off here on earnings. That is a very important level. If we put in a double top here and it looks like we can't break out, then again we could come back down to 150.50ish. That's coming into play off of some of the lows way back here. So higher low first of all, and then second of all, if we're going to continue in the upwards direction, breaking through this resistance, if we can get through that and trade back into this range here, we have our levels mapped out, initially running into resistance at 170.20ish, from there 174.85, and so on and so forth. But again, I do feel like this is going to be a big battlegrounds if we do come back and test that level. There is quite a bit of support here, as we can see by how tight these lines are. If we find it and continue in the upwards direction, great. If not, look for puts this week on Facebook as it continues in the downwards direction off of this double top. Alright, so now we're going to have a look at TLRY, Tilray, the Canadian pot stock company that has been going absolutely nuts this week. I'm not going to pretend like I know a whole bunch about it. I don't. All I can really do is analyze the chart and give you some thoughts on that. It's a recent IPO. It only went public, what was this? What day was this? This was 7/19, so it only went public about 2 months ago, and obviously it's been on an explosion here, and you can see that we had, this is where everything sort of went crazy. We had our high of $300. Let's sort of get rid of this white line, it's not doing us much. We had our high of $300. Just check out the Bollinger Bands on it, way overextended. That day was insane. I remember hearing everyone talking about it, and just think, some poor soul bought at $300. Someone was buying up here. The only way there was a transaction at $300 is because there's a buyer and a seller. Someone sold it at $300 to someone who bought it at $300. Just think of that. Ouch. Anyways, so they got wrapped up in a whole mess here. Price is definitely moving in the downwards direction now and consolidating a bit. It can't be on this. Look at this. This is what is called parabolic. It is making a parabolic curve, which is unsustainable. So let's just go ahead and map out some levels of support and resistance as we do with everything. So all-time high, $300, sure, that can act as one. Let's scrunch the chart up here so we can see a little bit more. It looks like we have some support coming into play around here, 155, based on where we gapped up and these tails are sort of hitting. Based on this low here, I would call $96 as a support after this pullback and continue in the upwards direction. Support here. And again, we could call the tops of these support too, because we would like to see those highs hold up. That one almost coincides, so we'll get rid of that. We'll remove that one, and that one will hold true. We are sort of sitting at that support level right now. We're sort of figuring out what the price wants to do. Personally, I think the thing is still way overextended. I personally wouldn't trade this one at all. I have no interest in getting caught up in some of this volatility. I'd rather trade what I know. So yeah, I hope that provides something useful on Tilray. Obviously, you can't even draw in ascending support lines because they would just keep doing this. Which again is the definition of parabolic. So those don't really do us much good. We'll get rid of those. No real support trend lines. There's no trend to be following other than straight up pretty much. Very unlikely that we come up to $300 anytime soon. So if you are holding up here at $300, sorry to you, but you should probably cut your loss now before things get much uglier. I feel like there is some more pulling back to be done before it can continue in the upwards direction, possibly coming down to some more supports. And again, something I would just stay away from totally. So, alrighty, that's going to wrap things up for this week's episode of the Weekly Watchlist. If you made it this far, I would like to thank you. Obviously, you have an interest in the stock market and trading in general. I'd encourage you to head on over to my channel and subscribe. I post a ton of other videos on day trading recaps, other episodes of the Weekly Watchlist, and stock market news in general if something crazy is going on, and I'm sure you would like the content. If you found this video useful, feel free to give it a thumbs up. That would be awesome. If you'd prefer to go over any other tickers that we didn't have over here on the list this week, let me know down in the comments section and we can certainly add them to the list. You can email me. Any way you want to let me know would be awesome. And as always, have a green trading week this week.